Just keep
All right,
moving.
back now here at the KFYR Plus news desk, and one guy who loves to play with the girls but has never been confused with transgender is our good friend John Saylor of Total Tax Solutions. He's here to unpack now the IRS and the Treasury guidance on the new no tax on car loan interest deduction under the One Big Beautiful Bill, helping viewers better understand our eligibility limits and, of course, reporting requirements. John, welcome back for our Tax Tip Tuesday, sir.
Jay, it's Tuesday because I get to look at you and get just smile. I wake up even early knowing that I get to work with Jay today, and it puts a smile on my face, and I know you've got some good questions for today.
I didn't even go to bed last night. I was so anxious I couldn't sleep. You know, like you are Christmas morning. I haven't slept yet, so I've been waiting for this, John, all night. So let's get right to it, my friend. Can you outline now some of the key eligibility criteria for this deduction?
So the key eligibility is a lot of people 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 don't understand that when you get an asset for your business and it's like, okay, well, it's used so I can't depreciate it. No, it just has to be new to you, that asset.
Mm-hmm.
But on these vehicles is it has to be a brand new vehicle purchased in the United States, and it has or I'm sorry, assembled in the United States, and it has to be purchased brand new in 2025. So then what we also need to do is if anybody did any of that, we need to actually we need the VIN number of the brand new vehicle because we punch it into the system, and that's what's going to qualify for that deduction or not deduction. That the car has to qualify for the deduction, and then the deduction is up to, I think it's $10,000 of interest that you pay on that car.
Okay. And so when does the deduction apply? And what about loan dates and tax years?
So as long as everything is purchased in that year and through 2028 right now is, and there again, there's some changes that could potentially come out with this, but basically starting in 2025, if you purchase a vehicle brand new, you can write off the interest. The loan origination date has to be in 2025. So it can't be where I bought a vehicle in 20 or in December of 2024, and then all of a sudden, in December, and then all of a sudden I started paying the loan in January or February. It had the loan origination date has to be 2025.
2025. So just remember that, folks. Okay. So, how do taxpayers prepare for claiming this deduction on their return? Is there something that, what's the best practice for them to do it?
The best thing, Jay, is they need to get their VIN. Just understand that first off that it's a vehicle that was purchased in 2025, that they do have
Mhm.
a loan out on it. And the biggest thing is just to bring the VIN number to their tax professional or call them
Okay.
and say, hey, I need to know if the VIN number, because it all goes off of that VIN number because we have to put that in, just like when we had to do the energy vehicles and stuff like that. Everything went off that VIN number, and then it has to correlate with that set of VIN numbers that the IRS has for it to qualify for the deduction. As far as the loan interest and stuff, that's just basically bringing in an end of the year statement that shows how much interest you paid on that loan for that vehicle. Pretty
Okay.
simple that way.
Uh, It is. It sounds pretty simple, but again, if you have any questions, John will give you a phone number, a website address as well. You can make an appointment with him and his folks there at Total Tax Solutions to get those questions answered. Let's talk about some other things here. Let's talk about common pitfalls that might taxpayers encounter and how they can avoid mistakes or even IRS inquiries when they file for, which, by the way, we'll get to our filing date coming up, when they make their return, when they file for their return.
Some of it is they don't have all of their documentation, or they didn't know that they could get this deduction, or they just people get in such a hurry and such a rush to file their taxes that they forget things. And when you forget things or you don't have them, then
Mm-hmm.
obviously we have to wait to file the tax return, or if the tax return gets filed, then we got to do an amendment and stuff. So the biggest thing is to kind of slow down to speed up, is what I say. Slow down, gather all your documents. If you have questions, talk to your tax professional. and get what you need to prepare your tax return. Another great thing to do, Jay, is I refer to a lot of people is take a look at last year's tax return and look and see what did you deduct last year, what kind of credits did you get last year, those things. And like most tax preparers like me, I take and I staple a copy of all of their tax documents from 2024 to the back of their 2024 tax return. Or here at Total Tax Solutions, we've got a secure portal that they can log in and look at all those documents. So then it's like looking in a mirror. It's like, okay, I've got this. So that's what I'm going to need this year. This is something that's new. Those types of things, and then don't forget to ask me about the overtime and W-2s also, Jay.
Yeah, don't forget the overtime and W-2s. Let's talk about that, John.
Perfect. Good question. So just recently we did some training. If you're getting paid through QuickBooks Online, if you're doing payroll through QuickBooks Online, they are not providing something separate on your W-2 for overtime. We just found that out. So QuickBooks Online, if you're getting paid through them, you're gonna need the final pay stub that shows the amount of overtime hours that you accumulated and that you were paid out. Some W-2s, I've already seen the pay stubs come in, and it's broken out as far as time and a half, time, half time, and then also double time and stuff. So, some payroll softwares are doing really, really good with it. Some are just like they're not required to do anything for 2025. It's 2026 is when they're required to do the tracking on the W-2. So just a huge reminder, make sure that people are bringing in their pay stubs that show the overtime hours.
One of those folks that, like me, I threw my pay stub away, when I got my last check December 31st and didn't think anything of it. Not many people, let's be honest, are still getting paper checks. I, for one, am still getting a paper check in my side gig, but, you could probably go back online, I'm guessing, right, at the portal that you have for work?
Yeah, absolutely. And it's very, very common that a lot of these businesses do everything's electronic. So with it being
Hmm.
electronic, they should have some kind of a secure portal that you can log into and view your most recent pay stub, your last pay stub. You can print it out, you can email it. So if not, the employer must keep those records for at least 3 years. So if you can't find it, you don't have access to your portal, the employer is required by the IRS to keep those records for at least 3 years. So you're not going to be out anything at that point. You should be able to go back to the employer and get that information.
Okay. It was announced last week, John, that the IRS will start receiving tax files on what date is it now?
Well, for today, January 13th, if you have a partnership or an S corporation or a C corporation, they are starting to accept any business tax returns that are those entities. I believe it's the January 26th is for individuals. So if you have a LLC, sole prop, those go on your personal tax return. Those won't be able to be filed until January 26th. However, there again, there's a lot of information that hasn't even been sent out yet. W-2s, 1099s, they don't have to be out until January 31st. And unfortunately, some people wait till the last minute. Some people don't get them out by January 31st. And, hopefully they're getting penalized for not doing that because it's just putting the individual at a disadvantage
Hmm.
because they want to get their taxes done, filed, and, beat the rush.
Yeah. Okay. Let's talk about, is it better to file as soon as possible for those that get their W-2, next week or before the 26th, or should we put it off until April 15th?
You know, there's a mixed concept out there every year, and I don't know how we get it changed and stuff. Filing your tax return, when the key to filing your tax return is when you have all the information. File your tax return, get an appointment, file your tax return. The thing is if you owe the IRS, that money is not due till April 15th. So even though you file your tax return, you e-file it and everything, not a problem.
Hmm.
The payment's not due till April 15th. So some people wait till last minute because, well, I owe the IRS. I know I'm going to owe, so I'm just going to wait until April. Don't do that. Don't do that because then all of a sudden you get thrown into an extension, and the extension is an extension to file, not to pay. So the biggest thing is when you have everything, file your tax return. you just know that you're not required to make that payment until April 15th. And then that's when the interest starts on that payment too, Jay.
Oh boy, yeah, that's a very key point, and I'm glad you brought that up. April 15th is if you wanted to file an extension just to file your taxes. If you owe $1,000 or $500 or whatever you might know, you need that money in by the April 15th, don't you?
Yeah, absolutely. And that's where some people are like, well, I'm going to owe that money. I'm going to wait till the last minute. Doesn't matter. You can file your taxes today. You still don't owe that money until April 15th. And with the new requirements of the electronic transfer and stuff like that, we actually set the date in your tax return when we e-file it, saying that, hey, we want this payment pulled out on on April 15th out of this routing number and this account number, and it takes it right out on the 15th. So no harm, no foul. So it's kind of a good system that way.
Yeah, absolutely it is. Let's talk about how, if the folks have any questions, maybe this might be a little bit too hard for them, or maybe it's first-time filers. What would you suggest they do? Get a tax professional, try it themselves maybe, and then see if they screw up? Wait for Uncle Sam to knock on the door, or what is your recommendation?
My recommendation is get a hold of us here at Total Tax Solutions. When you try to file on your own, there's been so many changes. I've already heard some complaints about TurboTax not being able to do this, and H&R Block Online not being able to do this and stuff. And unfortunately, you know, you need the competent software to make sure. Just like checking the VIN numbers. You know, I heard TurboTax isn't taking it isn't allowing you to put the VIN number in to get that deduction. Now, hopefully that gets changed for some of those people. But the biggest thing is come here, give us a call, get online at www.totaltaxnd for North Dakota.com. And we're going to have forums on there. We're going to have guidance. We're going to have regulations on there, you know, all the things that you need. And you can also schedule your appointment online at www.totaltaxnd.com. You can go on, schedule your appointment. So then you get a confirmation email, comes right to you, and we're all set. You just gather up all your documents.
It's hard to believe it's that time once again. Tax time is here, and I know that you're very, very happy about it. But listen, you got to be happy that over the weekend the Cubbies picked up themselves an all-star third baseman, though, right?
Ooh, that's nice. That's nice. And boy, I tell you what, if they get Cody Bellinger too, ooh, we're gonna be good. We're gonna be good. But we need pitching.
Yeah, we do need some pitching.
So,
We do need a lot of pitching there. So
one last thing to add, Jay, is you have until January 15th to do your quarterly estimated payment for fourth quarter 2025. So a lot of those businesses out there that are doing quarterly estimated payments, just figure out what you might owe for your income and expenses for the fourth quarter, which is October, November, December, and that payment is due here in a couple of days by January 15th. It needs to be postmarked. So,
all right. Well, John, thank you so much for the inside scoop on how we can save some money on that no tax on car loan interest. That is a big thing for a lot of folks. You know, anytime that you can save money, you got to do it as soon as you possibly can, because Uncle Sam will get his mitts on your cash, and he will keep it. I know for a fact.
Yeah, he'll keep it, and once he has it in his pocket, who knows where that money is going or what it's going to be used for or who's going to benefit from it. So you're better off getting with the tax professionals at Total Tax Solutions and keep that money in your pocket instead of their pocket. Because if it's in your pocket, at least you kind of know where it's going and not going.
That's right. Exactly. John, thank you so much, sir. I appreciate you. And you can catch John, of course, at Total Tax Solutions. Go to the website, get yourself checked out there, and make an appointment to visit with John and the crew at Total Tax Solutions. Have a great day, sir. We'll catch up with you again next week, all right?
You bet, Jay. Thank you again.
You bet. Now, bye-bye. All right, 44 now past the hour. We'll take a break. We'll come right back here with more news next on KFYR+.